today's presentation, I will be talking about offshore wealth management, your personal values, and your intuition. So working with a wealth manager is something that is very personal. It is a long-term solution. Sometimes it's a solution that lasts over generations. And we have 3 different levels of service offerings. All of them revolve around wealth management, but there are some distinguishing factors between them. So also from my side, a very warm welcome. I am extremely excited to be spending this beautiful spring afternoon with every one of you here today. We will have approximately 30 minutes together. I will talk for about 20-25 minutes, and afterwards we'll have 5 to 10 minutes to discuss any questions you might have. If you have any questions that are urgent and that you want to have addressed right away, please feel free to interrupt me through the moderator. I'm happy to take a step back and answer anything that you'd like to know more about. As I was already introduced by Victoria, so I'm not gonna get into my background anymore. My name is Jamie. I'm managing partner of WHVP, and today's presentation, I will be talking about offshore wealth management. The reason I'm doing that is because we as WHVP are specialized in this kind of work area. So we work mainly with Americans based out of Switzerland. We also have an array of other international clients, and we just feel that there's a lot of misconceptions and misunderstanding out there about the work that we do. So we try to put together an educational 20 minutes for you, just to give you some food for thought, to think about what to consider, what to think about, as I mentioned, in terms of working together with an offshore manager. After the 5 things, I will also talk very briefly about who we are as a company and what exactly we do. And then, as mentioned before, we will end with a Q&A session. So the first point that people should consider and think about before they head into this journey of selecting an offshore wealth manager is just taking a deep dive into your own personal situation. So this is mainly relates to your family, to your financial situation, and to where you stand in your career. I find it's important to mention this as a first point, because in our experience, a lot of people just skip over this step, and when they reach out to us, they don't know exactly where they stand and what they want. So I really encourage everyone who's interested in offshore wealth management to just take a half an hour or an hour and to think about what exactly it is that you are looking for. So are you looking for a solution just for yourself? Are you looking for a solution for you and a spouse? Are you looking to include potentially adult children or your parents into the solution? Are you looking for something in your name or in the name of a structure like a trust or LLC? Those are some of the considerations on the family side. Then on the wealth side, that's pretty straightforward. Just think about what is your financial situation. Do you have any liquidity needs over the next couple of years? Do you want to make contributions to the account? Do you want to take money out of the account? Do you want to move all of your money offshore or just part of it? Usually from our side, we recommend to only move 25 to 30% of your money offshore, because it definitely makes sense to keep a majority of the wealth in your home country. And then lastly, it is also relevant to think about your career. Are you still planning to work for another 10, 15 years? Have you retired already? Are you right at the step to retirement? Those are just some of the thoughts that you should be taking some notes about. And also know that when you talk to a wealth manager, when you have like an introduction call or meeting, those are probably some of the things that the wealth manager will need to know about as well, so that he can or she can think about what would work best for you and just to see if you are a good fit. As I mentioned, it's pretty straightforward, but it's still a step that a lot of people skip over and just dive right into it before considering that. So once you have a good understanding of where you stand and what exactly you want and need, it is time to move on to thinking about what you're looking for in terms of the partner that you want to work together with. And the first thing to look and think about there are regulations and specializations. The world has changed quite a bit over the past couple of years, and every country has a different set of legal framework, has a different set of rules and regulations. So it's very important that you make sure that you find a partner that is specialized in what exactly it is you're looking for, and also is specialized in the area in the world that you are coming from. So for example, if you're from the US, it's very important to be working together with a wealth manager that is registered with the Securities and Exchange Commission, or the SEC. That just shows you that the person is registered in your home country, understands the rules and regulations that are entailed in working with American clients. And you should, of course, also look for things like an understanding of your culture, of your language, making sure that people understand where you're coming from, and that you are also working together with someone who has been in the cross-border business for a long time. So as I mentioned, there's a lot of things to consider there, and it's just always helpful to have someone as a partner by your side who has a long track record, who has been doing this business for a longer time. Also, this is not a very exciting topic, but an important one, are tax implications. You want to make sure that you work together with a partner who understands the specific implications that a cross-border business can have on your taxes. You want to have a partner who can either help you file your taxes correctly, or can refer you to someone who can help you file your taxes. Some considerations, again, for Americans here are, for example, long and short-term capital gains tax. You want to have a wealth manager who understands this distinguishing and understands what the difference is. You want someone who understands what the implications are of investments into passive foreign investment companies. Those are just some bits and pieces that you should be thinking about when selecting someone you choose to help you manage your wealth. You want someone who not only understands the rules and regulations of the country that they are based in, but also of the country that you are based in. Then as a next step, you want to think about financial jurisdiction. So there's a lot of wealth managers all over the planet. There's a lot of cross-border hubs, and there's benefits and drawbacks to each and every country that there is out there. Some of the things that we find very important when thinking about a financial jurisdiction is first and foremost the economic and political stability of the country. So you do want to have a country where you bring your money in, where you feel that they have a strong economy, but they also have a very stable political situation. So for example, Switzerland, where we are based, is a very good prime example for this. Our country is pretty small, but it is world known for cross-border wealth management. And one of the reasons why it is so well known for that is just because of the neutrality and stability of the country. We talk about that a couple bullet points later, but Switzerland has been in the business of cross-border wealth management for almost 400 years. So there's definitely a very long track record there. And then also the fiscal situation is extremely important. So you want to bring your money into a country where the government is spending the money wisely and conservatively. You don't want to bring your money into a country that is too much into debt. Again, Switzerland is a very good example. Despite the heightened expenses that the country had due to the corona pandemic, it still has a debt to GDP level of around 40%, which is rather low. So compared, the US, for example, has a debt to GDP level of around 130%, if I'm not mistaken. So that's something that's very important to consider as well. Another factor that plays into that is a stable currency. So it definitely helps to have a currency like the Swiss franc, which is a world-known safe haven currency with not too much fluctuation. This just gives you safety and security and is a hedge against the potential devaluation of your own home currency. And then lastly, what I already mentioned earlier, the track record and expertise. So Switzerland manages approximately 25% of the worldwide wealth that is managed across borders. And the reason for that are the different factors that I have just mentioned. And I think this is something that is extremely important to note. Of course, there's also drawbacks. As I mentioned, there are benefits and drawbacks to every country. For example, Switzerland is a more expensive country. There you will need to have a higher level of total wealth for Switzerland to make sense for you as a financial jurisdiction. And I'm just encouraging you to looking into different options and seeing which country best suits your personal situation. In terms of the family, wealth, career, will be mentioned under the first point. Just really think about which country works best for you and for what you are looking for. Then as a point 4, the safety and liquidity of the custodian bank. So how a wealth manager works is they don't hold the money themselves. They work together with private banks who work as custodians for the money or for the client's money. This means that it is very important to look at the custodian banks that the wealth manager is working together with, because if something happens to the bank, that might also endanger your money. So what are some of the things to look out for there? I think the first and foremost point is the deposit protection scheme. I think in the US that's known as the FDIC. Here in Switzerland and also in Liechtenstein and Austria, we have very similar insurance as in the US. So up to 100,000 Swiss francs are insured per client. That's 100,000 francs in cash. And then, of course, all stock, bond, and physical precious metals investment are held in your own name and not in the name of the bank. So this is safe anyway in the case of bankruptcy of the bank. And then everything that's exceeding the 100,000 Swiss franc just goes into the bankruptcy proceedings. And there it might take a while until you get the money back. And also you don't have a guarantee that the rest of it will be paid back in full. So make sure that you work together with a bank that is insured. This also plays a bit into the point number 3 of the financial jurisdiction, because in the end, the insurance of the bank account is also part of the legal framework and the law landscape of the hosting country. Then, of course, there's ratings for banks. There are online reviews, and most of the larger banks also have their financial numbers published. So make sure to have a look at that. Make sure to have a look at the ratios, that the bank has enough liquidity. Most larger private banks in Switzerland are extremely well capitalized and extremely stable. But it still always makes sense to talk to your wealth manager about why they chose the banks that they chose, and have a look at the numbers for yourself. And then the very last point is your personal values and your intuition. So working with a wealth manager is something that is very personal. It is a long-term solution. Sometimes it's a solution that lasts over generations, and it's something that you need to feel comfortable with. In the end, a wealth manager helps you sleep better at night. They help you put together a safe nest egg outside of your home country. And it is very important that you feel absolutely comfortable with the person you chose. So if you don't have a good feeling after talking to someone, it is better to keep on looking for another couple of weeks or month than just rushing into something and then being unhappy once everything is set up. So keep in mind your personal time horizon. Keep in mind that this is a long-term solution. And even though the due diligence process might take a while, it is definitely worth it. Then you should also be thinking about your personal preferences. So are you looking for specific investments, for example, cryptocurrencies or sustainable investments? Are you looking to have a younger relationship manager or an older manager? Whatever your personal preferences are, just think about them and make sure that you find someone that fits all of your criteria. And then, of course, there are also ethical considerations. So do you have any restrictions in terms of what you want to invest your money in? And just keep all of that in mind when you reach out to a wealth manager. It's probably best to reach out to maybe 2 or 3 and to compare them and really see if they take the time to get to know you, if they take the time to answer all of your questions, if they can provide enough information about themselves and the company, and just make sure that you have a good feeling and that you find a partner that is trustworthy and that you can imagine yourself working together with for a long time. So those have been the five things that I wanted to share with you that I find are most important when thinking about selecting or working with an offshore wealth manager. As I indicated at the beginning of the presentation, I do work for an independent or offshore wealth manager that is specialized in working with US clients. And I now want to take a couple of minutes to tell you a bit more about what exactly it is we do. So it is not just myself. I have brilliant colleagues that work together with me. First, my husband, Urs. You can see him here. He is responsible for the investment decisions. So where I am more on the strategic side, I'm more into the direction of business development and client acquisition. Urs is taking more responsibility when it comes to managing and investing the existing portfolios that we have. And then we have Julia, who is also managing clients. She's been with the company for 18 years and has an extremely long track record when it comes to working with international clients. And then lastly, we have Daniel, our compliance officer, who has a great understanding of the US and Swiss legal framework and knows exactly what we can and cannot do and helps us very much in this way. The company has been in business since 1991 and has worked together with American and international clients from the very beginning. We have partner custodian banks here in Switzerland, in Liechtenstein, and in Austria. And we have 3 different levels of service offerings. All of them revolve around wealth management, but there are some distinguishing factors between them. So we call them Pilatus, Eiger, and Dom. Those are 3 very well-known mountains here in Switzerland. The first one, the Pilatus service or permanent portfolio, how it is also called, is a standardized moderate asset management mandate where we start from $250,000 US and we charge 1% a year for the management of that account. We work together with Bank Venture in Austria for this service. And we, as I mentioned, put together a standardized portfolio that you get in terms of how we put together the account with an asset allocation divided into stocks, bonds, precious metals, and foreign currencies. Then we have the regular asset management mandate where we start onboarding clients from $500,000 upwards, where we really put together a tailor-made investment service. So we have the same asset allocations as with the permanent portfolio, but it is more tailored towards your specific needs. So we can put together a list of restrictions. We can overweight or underweight certain investments and investment groups. If you'd like that, we can really dig into your personal time horizon and your risk preference. There you have a free choice of custodian banks that you can pick from and decide whichever one suits your needs best. And then lastly, we have our concierge level where we start onboarding clients from 1 million upwards, and the pricing is the same as with the asset management. It is 1.5% a year plus a flat fee of 10,000. You get everything that you get with the asset management mandate, but additionally, you also have some hours of concierge service included, as well as a personal visit to the city of your choice. With all of our services, of course, we help you set up the bank account. We lead you through the whole administrative process. You get quarterly portfolio reports. You can get an online access to the account if you'd like that. You also get a quarterly market report from our side where we share a bit about what has been happening and what we expect to happen in the next couple of weeks. You get regular phone calls or Zoom meetings with us. And if we are in the US, we are, of course, more than happy to visit our clients in person if we can arrange for that. And then lastly, we also put together, or respectively, the bank puts together tax statements specifically for our US clients with all the numbers and information included that they need to file for their US taxes. So that was a very brief overview over what we do and the different services that we offer. If you would like to learn more about those services, or if you have not remembered everything I just said, then I invite you to check out our website, WHVP.ch. You can find more about each of those services and the goals and prices and all of that in one place there. You can also learn more about our company there. And we also provide some further resources there. So on our website, under Insights, you can find our blog where we talk about current market developments. We have recently, for example, written an article about inflation. We have written about GameStop and the blockchain and Bitcoin previously. So whatever we think could be interesting for our clients, you can find some pieces on that there. We also have a podcast where we publish new episodes approximately once a month, where we talk to different service providers in the industry who offer services who are relevant and related to offshore wealth management. We have talked there about tax services, for example. We are planning an episode on probate and estate planning. So if those are topics that interest you, make sure to check that out as well. And then lastly, if you're interested in receiving our market outlook every 6 weeks, feel free to send us an email at info@whvp.ch. We'll be very happy to include you into the mailing list to receive all our insights over what's happening here in Switzerland and what has been happening on stock markets worldwide. And then lastly, if after this presentation you feel you'd like to learn more about who we are and what we do, and you want to dig into it even deeper than just our website, then please feel free to reach out directly to me. You can reach me by email at jb@whvp.ch, or you can also fill out the contact form on our website. So thank you so much for sticking with me for the past couple of minutes, and I'm now happy to hand it back over to Victoria. I'm not sure if there are any questions or if we can head right into the Q&A session.
Thank you very much, Jamie. Indeed, it was very, very interesting, and thank you very much for sharing this information with us. We had a question before we actually started about the fees of the asset manager. I think we covered that because you mentioned it could be anything between 1–1.5%, and there could be some fixed fees on that on top. Is there any extra fees that someone needs to consider when they try to use your services, such as, I don't know, bank account opening fees or any other administrative fees that you're working with?
Yes, so absolutely, that's a great question. Very relevant, of course. So our fee is absolutely all in. So from our side, there will not be anything on top of what we stated on our website and what I stated during our presentation. There is on top of that, there's the banking fee. And the reason I have not included that in the presentation is because it depends on the bank, and it also depends on the size of the account. So if you want to know what it would exactly cost for you, it's best to just reach out to us, and then we can see what the different schedules are from the different banks. Usually the banking fees are all in as well. They're also on a yearly basis and then charged once a quarter, but it is possible, depending on the bank, that there are some additional fees on transactions. For example, there's usually not an account opening fee, and there is mostly also not an account closing fee. But again, it depends on the specific bank and the size of the account and all of that. But usually this is determined after a first initial conversation, once we have a bit of a better understanding of who the client is and what their situation looks like. And then we can give definite numbers on that as well.
Understood. Thank you very much for sharing this with us. Also, we had a question, and that's a very interesting question. How do you guys reduce the risks when you're managing the funds?
Yes, absolutely. So I think the first and foremost point on that is that having a professional wealth manager definitely takes out the emotional component of the investing. So it is easier to stay rational and not be driven by fear or greed if you're not managing your own money. So I think that helps very much. And then more specifically on the offshore banking or the offshore wealth management side, I think having money in different financial jurisdictions, also in different currencies and different stock markets in the world, definitely increases overall stability and reduces the volatility of your wealth, because markets, even though they are correlated, of course, they never behave in the exact same way. And having a wealth manager that does not have the same home bias as, for example, a wealth manager that might be in the same city as you, definitely adds stability and reduces risk, in my opinion.
That's great. Thank you very much. Also, I was just having a thought, because I know for a fact that the EU banks are taking a guarantee on bank deposits up to 100,000. Is it the same situation with Switzerland and other parts of the world as well? Is there any guarantee from the bank's side when we are opening an account with them that obviously the deposits are safe?
Yes, absolutely. So as I've mentioned during my presentation, we have banks in Switzerland, Liechtenstein, and Austria. And you're right, absolutely, with everything you said about the European Union. And then for Switzerland and Liechtenstein, it's basically the same. It's 100,000 Swiss francs per client. And then all the investments are in your own name. So just the money that is exceeding the 100,000 Swiss francs would not be insured, but they also go into the bankruptcy proceedings. So it's likely that you get a part of that back as well. But the 100,000 are definitely fixed. I don't know about other parts of the world because we just serve those three markets. But I think those are very good guarantees for the clients to ensure them that their money is definitely safe.
Great. And I've got a personal question for you as well. I know that you wrote this amazing book. Where can I buy it?
Oh, yes, absolutely. I did write Swiss Money Secrets, but I wrote it with educational purposes in mind. So I'm not selling it. I'm just giving it away for free. So anyone who's interested in learning more about that can just send me an email, and I'm happy to send the electronical version of the book. And then, of course, if you come by to our office for a coffee, I'm happy to give you a printed version as well. So just send me an email to jb@whvp.ch, and I'm happy to send you a digital copy.
All right, I'm typing it immediately. Thank you very much, Jamie. Thank you so much for sharing this information with us.